Most financial advice you hear today is outdated. They tell you to save 10% of your income, put it in an index fund, and wait 40 years. In 1990, that worked. In 2026, that is a recipe for financial suicide. Welcome back to Alpha Ledger. Today, we're exposing the silent wealth killer. While you're focused on the price of groceries, the real inflation is happening in assets. The cost of a home, high-quality healthcare, and elite education is outpricing wages at a rate of 15% per year. Let's look at the numbers the mainstream media hides. Governments use the CPI to measure inflation, but they exclude the things that actually matter for wealth building. They track the price of bread, but they ignore the 200% increase in tech stocks or the 150% rise in prime real estate over the last decade. This is called asset inflation. If you are saving in cash, you are competing against a printing press that never sleeps. In 2026, $100,000 in a bank account has the same purchasing power for high-tier assets that $40,000 had just 5 years ago. You aren't just losing money, you are losing time. Every year you wait to invest, you have to work 3 times harder just to stay in the same place. If your capital isn't compounding faster than 15%, you are slowly drowning. The first killer is lifestyle creep 2.0. In the digital age, wealth is drained through convenience. Why is this happening? Because the global economy has shifted from ownership to usership. Companies no longer want to sell you a product once, they want to rent your life to you. Automatic subscriptions, premium digital services, and the frictionless economy of delivery apps are designed by psychologists to capture your investment float. Think about it. Your software is a subscription. Your entertainment is a subscription. Even your car features are becoming monthly fees. This is a deliberate psychological trap designed to keep your disposable income at zero. That $500 a month you spend on convenience isn't just $500. At an 8% return over 20 years, that's $275,000 you just handed to a Silicon Valley corporation for the sake of comfort. The 1% understands that true wealth comes from being the owner of the subscription, not the subscriber. Every time you click accept terms, you are signing away a piece of your future freedom. But the bigger issue is the velocity of money. Most people treat their bank account like a destination. The wealthy treat it like a transit station. In 2026, cash is a melting ice cube. You must increase the speed at which your earned income is converted into productive assets. We're talking about a 30-day cycle: earn, extract, and deploy. If your profit sits still for more than a month, it's losing its edge. In the old world, buy and hold was the mantra. In the new world of 2026, buy and accelerate is the rule. You need to move your capital through different asset classes with precision. Passive income isn't truly passive until the velocity of your reinvestment exceeds the rate of inflation. If you let your dividends sit in a brokerage account for months without a plan, you are feeding the silent wealth killer. You need a system that forces your money to work 24/7 without a single day of vacation. Let's talk about a strategy that is rarely discussed: digital geographic arbitrage. With the explosion of artificial intelligence, the location of your physical body no longer dictates the value of your output. The 1% roadmap involves earning in hard currencies, like USD or Euro, through automated AI-driven agencies or global digital assets, while strategically placing that capital in high-growth emerging markets where the ROI is tripled. Furthermore, the greatest asset of 2026 isn't a stock or a bond. It's algorithmic control. If you can command AI to produce high-value content, code, or data analysis, you own a printing press. This is an infinite leverage asset. Unlike a human employee, AI doesn't sleep, doesn't ask for a raise, and scales at the click of a button. Transitioning from a consumer of AI to an owner of AI processes is the single most important pivot you can make this year. You are either the person giving the prompt, or the person being replaced by the prompt. There is no middle ground anymore. So, how do you escape the silent wealth killer? Here is the exact Alpha Ledger execution plan for the next 90 days. Step 1. The liquidity sweep. Audit your convenience tax. Cut the digital fat and reclaim your investment float. Move every dollar above your 3-month emergency fund into a high-yield environment immediately. Step 2. The skill asset pivot. Spend 2 hours a day learning to automate a business process using AI. This isn't a hobby, it's the creation of an infinite leverage worker that costs you $20 a month but produces $5,000 in value. Step 3. Cycles of 30. Do not let your dividends sit. Use an automated drip. dividend reinvestment plan, to buy more shares of dividend aristocrats or fractional real estate every single month. This creates a snowball effect that the silent wealth killer cannot touch. Stop saving and start deploying. Move your capital into productive assets every 30 days to keep your money moving. Build or buy a digital asset that scales with AI. The gap between those who own the machines and those who work for the machines is becoming a canyon. Success in 2026 is about speed, leverage, and the courage to ignore traditional, safe advice. The world is changing faster than the textbooks can keep up with. If you are still following the rules of your parents' generation, you are playing a game that has already been won by the house. You need to become the house. Subscribe to Alpha Ledger to stay ahead of the curve and join our community of elite investors. We don't just track wealth, we decode the future so you can own it. Your financial legacy isn't built on what you save, it's built on the assets you control. Your journey to the 1% starts with a single decision to stop being a victim of the system and start becoming its architect. I'll see you in the next deep dive.